So the RBI monetary policy, the first RBI monetary policy right after the union budget and the first RBI monetary policy announcement, remember, after the Fed signaled rate cuts in September, the RBI has decided to leave repo rates unchanged at 6.5%, which essentially for you means your EMIs remain the same. I'm joined by senior economist Mitali, Nikore, as well as senior business economist Sanchita Mukherji. Thank you both for your time. Sanchita, to you first. RBI basically saying that, RBI governor basically saying that, look, inflation now is broadly on a declining trajectory overall, and also saying that, look, growth remains upbeat. But what really are your key takeaways from the announcement?
Thank you so much for having me here, Sakshi. It's always a pleasure. A couple of very important points. In fact, good takeaway or take home points would be that RBI still remains very, very cautious on the food inflation. Albeit we've had a very stellar monsoon season and the crop cycle should be really, really good and accretive. The fact remains that food inflation is a big concern for a country like India, which has 1.4 billion population, a growing income inequality. Food inflation is almost close to 50% of the core inflation basket. Having said that, last year the base effect of a low inflation would eventually gradually wear off. So the forecasted inflation numbers now given for this quarter was 4.9, 4.4, 4.7, and 4.3. So RBI is very, very cautious and vigilant in maintaining that 4.5% inflation target, which it feels is a very, very important step given that we have a lot of geopolitical uncertainties. We may not have lower oil prices going forward. So it's very, very cautious. Right now, there is a lot of pressure on the MPC to cut rates because US will be cutting rates in September. However, having said that, in an economy like ours, where food inflation, growing income inequality, a K-shaped growth recovery, all of these things go a very long way. The Monetary Policy Committee does not want to lose its credibility in what it's done. Over the years, they've managed the liquidity in the economy so well and the rate cycle so well. So they want it to be constant at this time in a wait and watch mode till the food inflation actually becomes transient in nature. Right now, it's not looking transient.
Right, Mitali, do you agree? So, food inflation concerns remain, but RBI retaining that FY25 real GDP growth target at 7.2%, saying growth remains resilient and upbeat. Your thoughts?
So, firstly, thanks a lot, Sakshi. It's always a pleasure to speak with Sanchita and yourself, and I fully endorse Sanchita's point of view. The pressure on RBI, from international developments is immense at this point. Let's just look at the last 3 days itself, right? We've seen on August 5th a bloodbath in global financial markets, and stock markets across the world because the Bank of Japan raised the interest rates in Japan by just 250 basis points, by just 0.25%. And that caused such a massive sell off, in global markets because a lot of hedge funds and analysts actually hedge their more risky investments against the yen, which is a very, stable currency. Now, this happens. On the other hand, you have the US pressure. The US has announced that they are going to reduce rates, which means that they are going for a accommodative monetary policy in that sense, and they expect inflation rates in the US to remain stable. Now, with these developments, there is a lot of pressure on RBI to say, okay, let's reduce our rates so that Indian currency is not used, as a parking lot for the people who are, hedging against the Japanese yen. So, in this situation, to resist that pressure and to prioritize the domestic inflationary scenario is definitely commendable. And of course, the food inflation is a challenge. I mean, oil prices are also a challenge. We know what is happening in the Middle East. So that is also a major consideration for RBI when they are deciding on the next, rate policy. But I think what is important at this point in time is that the RBI has not gone for an accommodative policy for GDP growth. They are saying GDP growth is going to be 7%. If we cut rates, what will happen? It's not going to change GDP growth by more than 1 percentage point, but it will increase inflation a lot more. So, therefore, in that balance, They have gone with the idea of prioritizing the stable inflation at 4.5%, as opposed to going for a very aggressive growth strategy, to make it easier to borrow. And this is also, by the way, despite the pressure coming from the real estate industry, because that is one industry which is really putting the pressure to say we need to reduce interest rates so that more EMIs reduce, and people can then purchase homes or refinance their homes. So despite that, the RBI has held, which is quite commendable.
Right. Sanchita, do you agree the RBI really prioritizing domestic inflation concerns, playing that balancing act at a time when central banks globally are being urged to take swift action?
Yes, I completely agree. In fact, Mitali's explained it very well. See, there's a lot of discussion right now on the effectiveness and the efficacy of the interest rate cycle itself. One is inflation can be demand adjusted. So, do the interest rates actually address the demand, or is it a supply side issue? Right now, we are seeing that it is actually, over the last couple of years, it has actually been a supply side issue, not really a demand kind of a driven inflation. Because demand, I mean, if you see rural consumption, it's still not taken off in a manner that one would hope for, right? So it is definitely not a demand side issue in inflation. It is a supply side issue in inflation, in which the interest rate is very, very limited. However, having said that, as a monetary policy committee, as a central bank, one has to be cognizant of the fact that yes, the food inflation actually is almost 50% of the core inflation basket. And it does affect the lowest common denominator in a manner that it would not affect the other stratas of the society. So the MPC is very cautious, they're very vigilant, and I think they've done the right step in going for a wait and watch mode, especially on the food inflation front, especially when these wars are happening, and tomorrow anything might happen on the oil price front. So, as a central bank, I think it's important that they remain conservative and vigilant, and which they are. Having said that, I think a couple of good announcements which came about, which is reducing the time in the check processing. I think that's fabulous. If they're able to do that from a T+1 to within a few hours, within a business day, that'll be really something. So I'm very hopeful on that front.
Right. Another announcement that really was sort of there was the fact that RBI has increased the UPI transaction limit to rupees 5 lakh for tax payments from 1 lakh earlier. Mitali, what do you make of this?
No, I think the UPI is one of India's biggest success stories. I mean, if we look at the entire concept of digital public infrastructure, as we have seen in the last sort of 2 years, the way that DPI has been built in India, and India's global leadership of DPI has been hailed by the World Bank, it has been hailed by the UNDP, it has been hailed by all sorts of international organizations, because India has gone ahead and built this entire infrastructure not only with the perspective of easing business transactions, but also to provide social sector benefits, using this entire DPI infrastructure. So today's announcement, I think, is like another sort of in a series of measures to strengthen the DPI infrastructure further. The use of UPI has become so commonplace, even for the smallest of transactions to the biggest of transactions, we are now relying on UPI because it's a safe mode. What is very important is the safety in your financial transactions. So today, I feel a consumer feels confident to send even up to 5 lakh rupees using UPI, which previously one would think, oh, I don't know where my money is going. It's like I don't even want to send 500 rupees on UPI. So just imagine where we've come in terms of consumer confidence and trust in the UPI system. That we're going from, a point where, oh, I'll do a test transaction to you of 5 rupees just to make sure you get the money, to now being able to send 5 lakh rupees on that system.
Right. So, a huge milestone there for UPI transactions. Sanchita, do you agree?
Oh, yes, agree, and like how. Very well explained, Mitali, because UPI, it remains to be the world's biggest public digital initiative, by far, heads and shoulders above any other public digital initiative, the largest payment system in the world. and the way it has reached the hinterlands, that man sitting on the highest peak of Himalayas can access beam and make a payment through his maybe his 2G phone is incredible. I mean, it has connected, it has taken away the entire corruption which comes at the middle level in terms of dissemination of benefits again to the common man. So it has gone a very long way, and I think these measures have been really good. In fact, another announcement which came with the MPC's decision today was to have a very strong and a very large repository for digital lending, because RBI remains cautious on the digital lending forum, which has been happening on personal loans and all of that. So they're planning to have a large repository for digital lending so that the credibility in that strengthens even further. So that's a good
Right. So
announcement.
really, right, really transformational there, and RBI's announcements really reiterating the UPI and digitalization success story that India has witnessed so far, an example for the rest of the world. Thank you both for decoding the monetary policy and sharing your highlights.
Most welcome. Thank you,
Thank
Sakshi.
you.